Hey everybody, welcome back to another episode of Everything Money. I'm here with Paul and Mo. We're talking about a few stocks today that are at their 52-week low. Paul, we preface this with like Clorox, Honeywell, Facebook, Shopify. You said, oh, shocker, Clorox is down. There are some reasons why they went up, why they went down. We'll show you these. We'll look at the financials behind these companies. Paul wanted to run a stock analyzer tool on Facebook with all that movement. We'll go into all of this and more. We're going to show you a value investing approach to potentially maybe buying companies when they're really beat down. That's when we like them, Paul. So let's get into the concept in your mindset about looking at companies when they're really hurt, like, for example, Clorox. You called this about a year ago, but so tell me why you're not surprised, Paul.
So I don't remember what we said in the video. We've made over 1,300 videos. I have no idea what we've said. I don't remember, but I'm quite sure, like other things, and other videos I said about stocks that surged because of COVID, was it a permanent surge? What's the reason why Clorox jumped up? It jumped up because revenue skyrocketed because people wanted to clean everything, including all their orifices 8,000 times.
Yep.
Was it Clorox or was it bleach that Trump said if you drink it, it kills
Bleach.
COVID? Which one was it?
Bleach.
Oh, Clorox is bleach, though.
They do make bleach.
Now, Paul, you've bleached your rear end in the past, I know.
Oh, 1,000%. You got to keep it. You got to keep it fresh for the ladies.
That one trip to Cancun last year.
Smoothie King today, and I asked for a drop of bleach inside of it. I got a flight tomorrow, so.
Mo, should we preface that now that everyone's getting canceled like Joe Rogan? Maybe we should preface that didn't happen. So
no, it happened. It happened.
But bleaching Paul's ass did indeed happen. So Paul, show us the numbers on Clorox, baby.
All right, so this is our Everything Money software, guys. If you've seen it, here's our chat above. More on this in a little bit later. Clorox. So let's see the 5-year chart.
Oh boy.
So guys, look at this. August 2020, and then all of a sudden collapse. Why did it collapse there? Jesus Christ, what happened here? Okay, so the low is 141. The peak, COVID peak, was like 240. Okay, not as bad as I thought it was B. It was B. All right, so $18 billion market cap, 3.1% dividend, now that the stock is down a lot. Now, here's the deal, guys. I always talk about dividend. This dividend is $563 million, but look at their average free cash flow in the last 5 years, $880. That's a big chunk of the free cash flow. Last year, they only had $580 million in free cash flow. They basically ate up all their cash flow last year on dividends. Now, let's go to the cash flow statement to see. Yeah, they had a couple they're actually growing pretty steadily. Let's see how their revenue did in the last year. Now, so look, their revenue is down from 2020. The revenue went down, which makes sense. Oh, wow, look at this profit drop, guys.
That is a plummet.
What was that?
That is a plummet. I mean, even looking back to 15, 16, it was all pretty good, and then net income just boom.
Well, yeah, this is COVID net income. This is COVID.
Right,
profit.
but I'm saying even before that, it was consistently around that 600 million number, and then all of a sudden, just like, look at that fall.
Yeah, so you got to keep these things. It went to 3.5% margin from almost 20%. So guys, when you see companies that have a big surge or a big fall because of one-time things, factor that in there. So let's go look at like Facebook, for example. Facebook, which is another one of the 53 lows, down another $1 billion today. Actually more than that, but they're down 4.5% today. So what is that, $25-30 billion? Now, this is one that I actually, in full disclosure, am building a position in because I do believe people are being a little dramatic with the fall. I'm not telling you to do that. I'm just telling you my process. But I look at this and they guided lower. They guided lower on future growth potential, and they had the first time that their daily active users went down. My comment was they can still grow their revenue with daily active users decreasing. Why? Well, guess why? Because they still haven't maximized the revenue on every user. And they're the largest freaking platform in the world. They had 2 billion, they have 1.95 billion active monthly users, 3 billion total between Instagram, WhatsApp, and Facebook. Look at this revenue growth. 84 to 118 billion. Look at this profit, 29 to 40. Look at this profit growth over the last 10 years. Incredible. Now, I'm gonna use stock analyzer tool. So here's the 8 pillars for Facebook. It's just valuation numbers. So this will do all the math for you. We have 6 checks and 2 X's. The 2 X's are valuation. But remember, as long as a company can grow, it's okay. If there's 2 companies, one grows 20% a year, one grows 5%, which one, everything else is the same. Which one would you pay more money for?
Of course, the 20.
20% growth. Of course. So that's what we have to factor in. Is it too expensive? We go to stock analyzer tool. First thing I do, pick number of years of analysis, 1 to 20, I pick 10. I'm no conservative. 8, 11, and 14% revenue growth for the next 10 years. Look at their 10-year growth, 41%. Profit margin, 30, 31.5, 33. I'm going to do the same thing for free cash flow because they tend to be the same. PE, 13, 15, 17. Again, same with free cash flow. And finally, 12.5% return because if you invest in an ETF, you'll get 9 or 10%. So in order to make money buying individual stock and have margin of safety, put 12.5%, hit the analyze button. Guys, we're there. We're there. And this is a pretty low number, 210, but it has to be 8% revenue growth.
Yeah.
I don't know. I believe they're even guiding revenue growth to be bad next year and only be in the next 11% or something like the next quarter.
Right.
I look at this going, oh, boy. I think it's 11% for the year-over-year quarter.
For the year, right.
Going, oh, my gosh. Are we really worried about this? I just think this is an overreaction. Could I be wrong? Absolutely could be wrong. But if I have 100 Facebooks, I would buy this all day long. If I had 100 companies that looked exactly like this with its growth prospects, I would absolutely buy it. So that's the whole game here. I am trying to buy 30 or 40 companies that fit the same look, that I'm buying for enough of a discount that I can make money off them as a whole. Facebook could go down to 150, 100. I don't know where it's going to go. The bottom line is that I'm a buyer at Facebook at this price, and as it goes lower, I will keep selling. More on that video later. You'll see a video later about selling puts to get Facebook at lower prices and be paid to wait. That's the way I look at Facebook. All right, so some other companies that are, what were the other ones? Honeywell?
Yeah, Honeywell, the fan company. Now, Paul, I need a fan to go to bed every night, and so Honeywell is very near and dear to my heart. I buy tons of these fans.
Yeah, you're I think a bigger diva than me.
Yeah, I'm a baby. Go ahead.
All right, so here's a 10-year chart on Honeywell. Well, this looks pretty good. Look at that, 51 bucks.
It does look very good.
Hit 237. Now it's 193. All right.
Clearly, there during COVID, people didn't want fans. Look at that drop.
Yeah. Dividend takes about half their free cash flow. But this is what I like. Their 5-year average free cash flow is the same as last year. So they're probably pretty consistent. Let's go to their 8 pillars. All right. So valuation has an issue. 5-year price of free cash flow and 5-year PE. And revenue growth. Ooh, revenue growth is down a lot. Let's go see that. Let's see why that is. Ooh, they probably sold something off. They had to, guys, this kind of drop. They had to have sold something off. So let's go to their cash flow statement. Oh, no.
Uh-oh.
What's going on here?
What do you see?
Why did the revenue fall? So this is something, guys, this is what 8 pillars are great about. It tells a story. My first thing is, why were they growing revenue or staying the same, and then all of a sudden a big drop? Go find that out. Now, does that mean you shouldn't buy the company? No. Even companies with decreasing revenue have value. If I told you I was going to pay you $5 and 4, then 3, then 2, then 1, and then 0, it still has a value. It's still $15 of cash in the next 5 years. You're willing to pay something for it. So that's when you use the stock analyzer tool, put your assumptions in, and it'll tell you what price to pay. But make sure the assumptions have a low assumption of like negative 2% revenue growth and 0, then 2% or something like that. What was our final stock, Seth?
Shopify. I have an account on Shopify. I sell my my DGF product on there. It has a nice interface, Paul, but I basically just see it as another way to buy things. I would say that it does integrate really nicely with websites. So I have a Squarespace site that I hook into Shopify. My orders go through. I mean, it's nice software, Paul. Do any of your companies use Shopify?
I do not think so, but I'm not really in charge of that. So
Shopify, Shopify is super clean.
Yeah, and I think, it just made sales so easy, much like when eBay introduced the concept that they can pay through eBay, obviously, but then setting up the shipping, sending out the correlating email reminders and tracking, that's very helpful. So I do love Shopify. Tell me about it, Paul. Show me some numbers behind it.
Look at this. Look at this high of 1763 in the last year, and it was recently as low as 780, and it's currently at 872. So, again, let's go to the 8 pillars. I mean, almost 1,000 times free cash flow over the last 5 years, 162 times the 5-year earnings. Okay. That's pretty sick. Net income growth. I mean, guys, this is 40%. Look at this, guys. Shares outstanding have increased 40%. I'm going to really want to accentuate this. For those of you new to the channel, shares outstanding are the silent killer of investing, of companies. They're diluting you. If a company has 10 shares outstanding and you own one, you own 10% of the business, 1 out of 10. If they issue 2 more shares, there are now 12 shares outstanding, but you still own one. And now you own 1 out of 12 shares, which is 8.33%. So you went from getting 10% of the profit to getting 8.33% of the profit just by issuing shares. That's dilution. In this situation, they had 10 shares and now they have 14 and you still own one. Major dilution. We're on 10% down to 6.5%, 7%. So guys, I look at these 52-week lows. Facebook's the only one I really saw where I go, okay, this one makes, because there's a story behind it that I like. There's a fear story behind it. I like it when there's fear. Fear to me makes a lot of sense. Now they're talking about, oh, Facebook's going to be shut down. Instagram's going to be shut down in Europe. Okay, doubt it.
Mm-hmm.
But there's a way to make money off these. How do you do it?
Yeah, that's correct, Paul. Mo can show you how to trade. He's showing Paul and I in the day trading chat in the Bid and Ask Nation, the tier where we're trading. Mo, walk us through some charts on some of these companies. Now that they've spiked down low, the opposite of spike. Show us what you can do with the trading.
Guys, Facebook is one of my favorites right now, not only from a value perspective, but also a trading. So this is the long-term chart. Let's blow this up a bit. So we are at a very strong support level here where we just have a lot of consolidation that happened in the summer of 2020. Now, the good thing is we have this gap that needs to be filled. I do think that the sentiment is very negative around Facebook right now, and that can turn around, and is what will make this gap fill. The best part about this gap is the 4 major moving averages are way up here. So you have all of this room to run back up to hit these before you find any resistance from moving averages. So let's come back here to the long-term chart. But what I do here, I would just take this thing, put it on a very tight watch list. You don't necessarily need a tracker share, and wait for this red line to just start moving towards that sweet spot. As soon as it does, that's your indication to go and buy it and go long on it. Now, if you want to go look at something crazy like Shopify, it has a lot of volume every single day just because it is a hype stock. So go and find a way to do this. My process is very simple. You look for good volume coming into the stock. Your stochastic is over 80%, and you're looking for engulfing candlesticks on the way up. And if you get a company like Shopify that has a lot of daily movement, this is a company that you can easily day trade and make money on a consistent basis every single day. If we just start moving back, you saw on February 2nd, it was a short for the majority of the morning. Yesterday, you could have gone long on it sometime in the afternoon. So every day, there is something that you can do with these stocks. If you want to learn how to trade, come and join me in the Bid and Ask Nation. You'll learn from any perspective.
You can watch more of our videos. Click the link below about the 8 pillars. We go in depth about why we chose these 8 metrics to follow and start the screening stocks out. You can quickly say Clorox is not for me, or Facebook very well might be something you want to invest in. Click the link below to check out the 8 pillars. And if you want the software we've been using in this video for yourself and have on your phone, Paul, take it away.
So guys, we created the software because people who are watching our videos didn't want to wait for us to make videos in every stock. There's over 10,000 stocks out there. So we made the software. It includes the 8 pillars that you saw before. It includes retirement calculator, which is phenomenal. It includes a stock analyzer tool, which allows you to put your assumptions in for a stock. It's been our most popular tool. 8 pillars portfolio. You can put up to 50 companies in one portfolio and see how it looks as a total, combining all financials. Exclusive video content. Guys, we post videos every single day into our chat right up here. As you can see, I have messages waiting for me for everybody to sit there and see private videos you won't see on YouTube. Everything here coming soon. This is all available. The biggest thing about the software, though, is this chat. This chat has over 6,000 people. If you feel alone in the investing journey, where you have thoughts on your investing, but nobody else agrees with you, there are people in the chat who agree with you. There's thousands of them, and it's growing every single month. It allows people to have conversations about everything, including crypto, including Tesla. I still, in the highest tier level that only talks to me, I still get people saying, hey, Paul, I still have Tesla. Great. We have a conversation about it. We move on. I'm not as aggressive with them, telling them stupid. But the whole point is, this is all available for $1 per day. Less than a cup of coffee, $1 per day gets you all of this. If it can increase your returns by 1 or 2% a year, or decrease your losses by 1 or 2% a year, it'll make you hundreds of thousands and actually probably millions of dollars. So $1 per day, the price you sign up for today, you're locked in forever in that level. Sign up now. everythingmoney.com or Patreon. The benefit of everythingmoney.com directly is you don't pay sales tax yet because we're not big enough. Go sign up.
And Paul, what is your final take on these 4 companies?
So I like that people are looking at 52-week lows. It's a natural good reaction to try to find some value plays, but don't think that just because it goes to 52-week low, that it means it's a good buy. Netflix was recently bought by Ackman. He said, it fell so much and then rebounded. Everybody's like, look, it fell. It's like, no, that's not the way it really works. 9 times out of 10 doesn't work that way. Still understand value, still find a process, and still find the companies that fit that process. But I do like the idea of looking for companies that have their new 52-week low.
Final thumbs up on the way out. Join the community. Get the software. You'll love it. We'll see you next video, guys. Thank you.